Mate, thank you so much for joining. Are you coming in from Sao Paulo right now?
That's right. It's good to be here, Brendan, as always. And yes, I'm calling in from São Paulo, Brazil.
Nice. Well, can you just give people your background? Just, how you came to found Loft. So everything up until the founding of Loft. Like, what was that inspiration that led you here?
Yeah, it's a bit of a longer story, but I'll try to convey it in a nutshell. I've been a bit of a global nomad up until here. I've been living the past 10 years in Brazil, but before that, I lived in a couple of different places in Europe. I was born originally in Hungary, in Budapest specifically. My parents then, actually as refugees, after the Iron Curtain fell in Berlin, my parents were able to migrate to Germany. So they settled down in Germany, and I spent sort of the better part of my childhood and adolescence growing up in southern Germany. So a lot of my formative years were spent in Germany before I then moved to the US for college. I was able to get a scholarship at Harvard, and I did my undergrad in economics at Harvard University. After that, I spent a brief stint in finance, and it was during that brief stint in finance that I met my current co-founder, who also happens to be half German, half Brazilian, I guess. He was the connection to Brazil. So Florian, he had also been studying in the US. He was completing a degree at Wharton, and both of us spent sort of a year and a half, 2 years post-college working in the financial industry. Initially in banking, and then later on in private equity and at hedge funds. So, we basically during that time started iterating, or started, I guess, dreaming about starting the company, and specifically we hit it off kind of as far as the co-founder dynamic is concerned. So we before we even decided what to do and where to do it, we had decided that we wanted to start a company together, and then kind of started the iterative creative process of thinking about what to do. And we actually settled on where to do it first. So Brazil got into the map fairly quickly. This was in 2010, 2011. So about a decade ago now, when the world was still recovering from the financial crisis. It felt like it was a good time to not be working on Wall Street, or not be necessarily trying to construct a career on Wall Street. And it did seem, conversely, it did seem an exciting time to be moving to emerging markets. And both of us had already traveled around during college and prior to college to lots of places in Asia. I had not spent a lot of time in Brazil, honestly. I had read a fair amount about Brazil, and I had seen that the technology and sort of consumer internet market was getting to an interesting inflection point. Brazil was getting up there in like the top 2, 3 of Facebook and Twitter users. So Latin America, I guess, as a consumer economy, was digitizing pretty rapidly. And so, we followed that opportunity. I visited Brazil a few times before kind of making a more decisive leap, but it was really a gut decision. It felt like I really liked the reception of the people, and I felt like we could really do something interesting here. There was there were still plenty of challenges to be solved, and there's certainly plenty of challenges everywhere. But as an entrepreneur, it felt like, if we were to be successful in Brazil, it'd be doubly rewarding, because whatever we did would probably sort of move the needle more than it would if we did it in Europe or the US for that matter. So that's how I ended up here about a decade ago. Started my first company, which had nothing to do with Loft per se, but it was also a tech-enabled business. So it was a business that was in the e-commerce space, specifically in online printing. So those of you that might be familiar with Vistaprint or some of the other online printing companies in the US, we built something similar, obviously highly adapted to the kind of Brazilian local consumer needs, but we built and scaled that business for about 7 to 8 years. and eventually ended up actually partnering up with Vistaprint. Vistaprint ended up investing in us, and then later on actually acquired us as they were moving into the Latin American market. We're looking to build up their stakes. It was a very successful story for us, especially when I started the business, I was 22 or 23 years old, so still quite young. For us to be able to kind of go full circle, if you will, on starting, scaling, and selling the company was very rewarding, but it felt like it wasn't really the business that we wanted to run for the rest of our lives. So it really was a very successful marriage with Vistaprint, and today the company is actually number one leader in the space in Latin America. So it's one of the largest B2B e-commerce companies out there. And so as Vistaprint then took over the day-to-day management of the business, we handed over the reins and we moved on to looking at the real estate market. And so that's, I guess, how we got to meet with you guys. And about 2 years ago or so, ended up meeting with you and Vic and the Fifth Wall team more generally, just as we're about to get started with Loft.
And so it sounds like, even rewinding, past Printy, it sounds like the who was very clear to you and your co-founder Florian, and the where was also very clear, or at least was clear in both instances. But the what had kind of evolved. And I'm curious why you picked real estate. Like, what was the draw to real estate in Brazil?
Yeah, I guess, the first time around, we were still quite naive, and it was very much a gut decision of what to do. We obviously iterated before we started Printy. We had looked at some markets, but we weren't nearly as deliberate about it as when we started Loft. I think when we started Loft, we had a very, concise framework for what kind of market we wanted to tackle, what kind of impact we also wanted to have. I guess naturally, as you mature as an entrepreneur, your ambition grows, and your, I guess the potential sort of markets that you can tackle gets more restricted. But we did get very excited about real estate as a market that was still extremely intransparent and inefficient. B, very little, I guess, not just technological innovation, but also just process innovation still to be done. So to the extent that, it's still challenging in a lot of emerging markets to come about a lot of tech talent. So building a business that's sort of a pure technology company is difficult, but there's myriad opportunities to build tech-enabled businesses. So real estate really combined a large kind of incipient market that hadn't really been innovated through technology yet, and it felt like really kind of one of the big last frontiers. Specifically, if you look at the B2C experience, if you look at the consumer experience in real estate, even the US has evolved quite a bit over these last few years and decades, but you're still talking about a market that, despite being the largest asset class in the world, still transacts essentially purely peer-to-peer. It's a market that, has very few kind of institutional trust and guardrails and controls beyond sort of legacy processes and kind of legacy notary systems and so forth. So it felt like there was just a lot to do from a few different angles. And so I feel like the biggest challenge actually was not deciding on real estate as a category that we wanted to play in, but more about kind of what would be our initial edge and what would be our angle. And that's how we ultimately got to the idea of doing something along the lines of Zillow Homes or Opendoor, leveraging the power of a really strong sell side proposition, namely liquidity up front, cash up front, to use that as an initial wedge into the market, and to be able to ultimately build a profitable model, even if we were not to be kind of doing this on a national scale. I think that's the beauty of real estate. You can really build a large real estate company, whether it's a developer or whether it's a tech company, and you can be street easy in Manhattan and you can be a relevant business. And that's kind of where we started. We literally started in one neighborhood in the city of São Paulo, and then from that neighborhood, in I guess concentric circles, started expanding. And today we cover both of the largest cities. We cover both of São Paulo and Rio, and we're planning on expanding into other tier 1 cities. But it's a very different market with very different challenges, but ultimately a lot of the kind of universal principles of entrepreneurship apply the same way that they would in the US.
And how much, when you started Loft, was Opendoor kind of an example or kind of an inspiration. And what I'm asking is, how much of the Brazilian residential market is just idiosyncratic to Brazil, and how much can actually be learned from the US?
Yeah, it's a very good question. I think that when you initially start a company as an entrepreneur, you obviously lean more heavily on any example, whether it's domestic examples or foreign examples, but you try to sort of gain inspiration from examples. But then pretty quickly you start to realize that much less about the models is kind of universally applicable or is generically kind of portable. And there's actually a lot of local specificity in real estate overall, but also in this model specifically. And, I think that one of the things that we started to realize quickly was even though I guess the sell side proposition of providing upfront liquidity to the seller exists anywhere around the world, everyone's looking to sell their apartment for a fair price and to do that quickly. I think that's a universal desire in the real estate market. What does change though is the way that the kind of fabric of the underlying real estate market, namely the broker market, is structured. In the US, Opendoor and all the players in some ways have a challenge, but also benefit in a big way from the MLS or the collection of multiple listing services that exist in the market. So just the data.
And is that a data thing, Mate? Like, meaning there's just higher levels of data transparency about home price valuations in the US than non-US markets?
Yeah. So it's a data quality and quantity and quality question, but it's also interestingly, I guess if you take a step back, what enabled the MLS to exist in the first place? It was collaboration amongst the brokers. So the fact that agents and brokers collaborated and decided that there would be this concept of exclusivity, that there would be a sell side agent, there'd be a buy side agent, and agents generally are not at risk of getting disintermediated in the process as part of a real estate transaction. That helped the MLS to come about, and that in turn enabled all this like data richness to exist in the US. So if you look at the Brazilian market and frankly also a lot of European markets, as we're scaling Loft and we looked at a lot of the markets that we had lived in personally in Europe, a lot of those markets also don't have all this transparency. And a lot of that is because the broker community just doesn't have incentives to collaborate. And that means you end up having much worse data, at least publicly available data in Germany than you would in the US, just as an example. So I think that is really kind of the cornerstone upon which we didn't initially build Loft, but we very quickly realized that data would have to be that differentiating cornerstone because there wasn't any good high quality data out there. And it frankly wouldn't be responsible to try and build an iBuying business at scale without at first having better data predictability and data both around prices, but also importantly around liquidity. How do you kind of measure the turnover, expected turnover of a home as you're trading it, as you're selling it? And because ultimately, I guess both Opendoor, ourselves, and also Zillow, none of these businesses are in the business of holding real estate per se. It's really, you're trying to be a clearinghouse. You're trying to create liquidity. You're trying to create a transactional marketplace. You're trying to be much more similar, I guess, to an Amazon than you're trying to be similar to like a publicly traded REIT. So I think the getting data and predictable and rich data, both on the pricing and the liquidity side, was super important. And the way we got around that challenge was by doing this in a very geographically ring-fenced area, starting literally with one neighborhood where we bought up all the publicly available data that was out there, but then also enriching that data with a lot of data sources or variables that we thought were relevant, physical properties of the apartments and condo buildings, just a lot of quantifiable variables that hadn't previously been really quantified or at least joined up together in a single database. And then using that as an engine, as a predictor, or I guess, borrowing from some of the US parlance like an AVM, that would power our buying and selling decisions.
And you made this point earlier that, the residential real estate market is this somewhat odd market in the sense that it's enormous, it's vast in every country. And yet, by and large, it's a peer-to-peer market, right? So you have end users selling to end users. And I imagine part of your philosophy, as well as Opendoor's philosophy, and it seems like any iBuyer's philosophy, is that there should be this mediation layer, this intermediating B to C business that ultimately sells the homes to a consumer, but also C to B business, right? Where that same business is acquiring homes from the consumer. How much of the absence of, that kind of mediating business, that intermediating company in the center of this large market was due to the absence of data, and how much of it was pure timing? I'm just curious to get your view on that.
Yeah, it's a good question. I think that part of it definitely has to do with a lack of data, or with the cost of data rather, being relatively high. If you look at it sort of on a unit level, you could obviously decades ago pull all this data at the sort of state and notary level in most countries, but just the ability to kind of harness this data, process it, and have it be kind of updated in real time. The cost of that is still significant. You're still talking about millions and millions of dollars of cost outlay to do that, but it's a fraction of what it would have been a long time ago. So I think data availability hasn't changed that much, but the costs of the data has come down dramatically. Just the fact that my AVM can run on AWS, and I can do that in sort of almost an infinitely scalable fashion is massive. It's
Mate, just so people know, what's an AVM?
It's an automated valuation model. So just think about sort of how do I price both what an apartment is worth and how liquid I expect it to be, sort of in real time. How do I put a price tag on somebody's apartment? That's what an AVM allows you to do. And nowadays there's plenty of companies that even offer these AVMs to third parties. So there's data providers that essentially take the raw data that the MLS provides and then create an AVM for you. But if you look at Opendoor, if you look at Zillow, if you look at a lot of companies, even companies that are doing this in the car space, transactional car marketplaces, like a Carvana or a Room or a Shift in the US, these companies also have their own AVMs that allow them to determine, like, should I be paying blue book value, or should I be paying above or beyond, below the value of what the seller is looking to do. So I think data really kind of brought companies into this game. And I think also access to capital, the fact that you can now raise quantums of capital that allow you to take a lot of this risk on balance sheet. I think in, doing this in the 70s, 80s, or 90s would have been nearly impossible because the capital just wasn't out there. And I think ultimately also the evolution of this kind of evolutionary curve of consumer adoption of internet technologies allows you to today be able to step up to a consumer and say, hey, I'm going to offer you a lot of convenience, allow you to sell your home online. If you had tried to do that 15 years ago, there would have been a lot of resistance. And nowadays, I think one of your recent talks, you mentioned that your parents now buy pretty much everything online. So do mine. So I think that it's become, second nature to us to just purchase anything online, essentially. So even as you move into higher ticket categories, whether that's cars or homes, I don't think it's inconceivable to have kind of an Amazon of homes, or several Amazons of homes in different markets in different regions that allow you to transact real estate in a more frictionless fashion.
And clearly we agree. I think it's counterintuitive to a lot of people that you can, within a certain confidence interval, arrive at the price of a home a priori, right? Just through computation, through aggregating and integrating and running calculations on all these data sources that you mentioned. I think to some extent, it's a little more intuitive to people that you can do that with a standardized product like a car, right? Because the concept of Kelly Blue Book value has been around for quite some time. I think with homes, there's a counterintuitiveness to it that's very unique to real estate. And I'm curious how people react to that when you say, look, I can price a particular house, a particular condo within a few percentage points of my confidence interval. Do people react to that with trust? As I totally believe you on the customer side of it, meaning customers do just have a trust in internet services in a way that they didn't 10 years ago, and they certainly didn't even 6 months ago. But more about the valuation. How do you build consumer trust that your valuation is high integrity and can be trusted?
Yeah, that's a very good question, and I think that that's one fundamental way in which we differ, at least in terms of how Opendoor originally started. I know nowadays Opendoor also offers listing services, but given that when we launched, there wasn't really a kind of Zillow equivalent in Brazil, we pretty quickly became both the Opendoor and Zillow, obviously on a smaller scale and more geographically focused. But we kind of filled a vacuum both on the iBuying side, and we filled an existing kind of vacuum also on just high quality listing service side. And then we were able to offer choice to the customers. So since a year ago, a year and a half ago, if you come to us and you want instant liquidity on your home, then we'll tell you the price is X. But if you're not necessarily in a rush, you can list on our site and you can see kind of what the open market is willing to offer you for that property. So we don't create any kind of pressure on the sell side. We don't necessarily say that our value is the perfect value. We do think that it's a good approximation of fair market value, but a lot of consumers may disagree with us, and they may come back to us 6 months from now and have us reprice the property and then eventually sell to us. So I guess it was a kind of patient approach or patient strategy around trying to educate the market, especially because you do have a relatively meaningful gap between the kind of bid and ask spread. So the price that customers think that their home is worth, and ultimately how much it really is worth or will transact for. I think that's universal. That's human nature. I think the question is just what is that gap? Are we talking about 2 to 3%? Are we talking about 15 to 20%? And one of the things that we have found, which is pretty interesting and kind of universally true, is that the transparency of the market is inversely correlated with the size of the bid-ask spread. In other words, markets like the U.S., where you do have a higher degree of transparency, both buyers and sellers already are kind of on the same page what a home might be worth. Again, with like a call it 5% or maybe even 10% delta and confidence interval, but you generally kind of know what a home is worth. You might not like the price, but you are in disagreement. You are in agreement. Whether it's in Brazil and emerging markets or less transparent markets, generally the opposite is true. So we have to take a more patient approach to kind of educating the customer, showing the client that we think the property is worth X amount, and if he disagrees with that, he should just list it with us for free. So, different from, I guess, some of the more traditional classifieds models, our model is a model where the seller can list for free, and we will take the photos. So we will kind of create a high quality listing. We'll also do 3D tours for essentially all of the properties that we list. For some properties that require some fixing up, we even create 3D models of what the property might look like post renovation. So we do a lot of hand holding on the seller's side to enable the seller to go through the price discovery process themselves. And again, 2 months in, they might decide to just sell for us for the instant offer price that we had offered, or they'll just wait for somebody else to come around and offer them more. So it's a broader price curation funnel. I think that's in summary how you could phrase it. Whereas in the U.S., the iBuying price and the price that you could capture by just letting the property on market for a couple of weeks is tighter. You're talking about a world of tighter spreads in the U.S. Because of a higher degree of data transparency.
And when you think about that bid-ask spread, which going back to, college finance days, I mean, that's the inside market, right? If you want to sell a stock for 130 and I want to buy a stock at $100, the $30 is the inside market. And the amount of data we can gather about what other transactions are clearing at informs both of us and hypothetically closes that inside market. I appreciate that in a market like Brazil, there is a wider inside market. There's more daylight in the price that a seller is willing to sell at and a consumer is willing to buy at. How do you think that closing that gap with data, right, and offering more transparency creates a consumer surplus, is a benefit to the consumers in the Brazilian housing market? And I'm just asking more philosophically, like, where does that lead? Does more transparency lead to just more liquidity into the market, higher lending rates, more affordability for housing? Where do you think that takes the Brazilian housing market?
Yeah, it's very much a part of our mission to make the market more transparent, because we do believe that higher transparency will lead to smaller spreads, but it will also lead to higher liquidity, higher turnover. I think similar to kind of the analogy I made around, the lack of transparency and lack of kind of price discovery on the liquidity side. When you're looking at a market that has lower transaction costs and a market that transacts more, generally you just have a bigger, you just have higher turnover. People end up moving more, and people end up living less time in suboptimal conditions. And that goes, part of that is education. So part of it is us trying to kind of show people, hey, mortgages are not universally a bad thing. I think that one of the inheritances of the legacy of high interest rate environments in China and Brazil is that a lot of people are fearful of financing. People are fearful of mortgages. I think something like 90% of residential real estate transactions in the US have some sort of leverage attached to it. In Brazil, that's closer to 20 to 30%. So only about less than a third of real estate transactions in the big cities have any kind of leverage associated with it. So, that really feeds directly into the affordability question. People end up living in the same home for much longer until they can afford to make an all cash transaction, perhaps twice as many years down the line as they would if they were living in the US and if they had the same kind of median household income, adjusted for their PPP. So, same kind of income bracket in Brazil will move much less often than they would in the US. And this is not just between cities, this is literally within the city. You're looking to add an extra bedroom, you'll do that much sooner in the US than you would in Brazil. So I think that as we look into the future, especially in the low interest rate environment that we're in today, I think that is a significant tailwind for us in sort of the global real estate economy, but also just transparency, just us open sourcing in a way, our AVM, open sourcing our pricing tools, similar to how Zillow has done in the US, and just making that very accessible. I think that'll build trust, and through that trust, people will be more willing to take a purchase decision, especially if that's combined with affordability, if that's combined with knowing that they'll be able to sell that home again and that they can actually afford that home whilst they're carrying it. Because transparency cuts both ways. It creates this kind of reticence going in, but it also really creates a lot of fearfulness on the way out. Like, am I going to be able to sell this? How much is this going to be worth several years down the line? I think in the US, you just kind of universally, especially if you're moving into an area that has a diversified economy, in an area that kind of has proven that it's resilient, you generally don't tend to kind of associate a large expectation of loss around the property. To the contrary, you might even think that property will appreciate. And here, a lot of that is to the contrary. People do think that real estate is a store of value, but especially when you talk about financing, there's still a lot of mistrust, and a lot of that also comes from just the concentration of the banking sector. Not to go on too much of a tangent here, but when you look at a lot of emerging markets, you see that the banking sector is way more concentrated than it is in the US. So as we look at fintechs, as we look at expansion of just the ability to fund your property, especially if you're a subprime customer, I think that there's a huge opportunity for companies like us and others to revolutionize not just the transactional piece of it, but also the funding side of it, the mortgage piece of it, whether it's in combination with banks or whether it's also in kind of co-opetition with banks, originating for banks, but also originating on our own balance sheet eventually.
And you made this comment about the effects of adding transparency, and I'm curious if you anticipate that in a market like Brazil, in a developing economy, adding this transparency at the stage that the market is at right now has the ability to almost leapfrog some of the things that have happened in the US that have been pernicious to affordability and to credit. In particular, I mean that when you add transparency, right, you restore a certain amount of consumer confidence and buyer confidence that they're getting the right home at the right price, and in turn that gives more liquidity that in turn provides for higher leverage levels and lending from banks, which in turn leads to more affordability, which I think everyone can agree is a positive thing. And when
Yeah.
you look at the US, right, it's almost like we had very high leverage levels in the US way before we had enough data to truly be transparent, both between the buyer and the seller, but also between the lenders and the ultimate buyers of that debt. I mean, that's what spawned the housing crisis. So
Right.
this is a very philosophical question, but do you think that Brazil has the opportunity to almost leapfrog some of the credit issues that in some ways stemmed from transparency that occurred in the US because this collapsing of the bid-ask spread is happening later and through technology, given where we are in 2020?
I think that's right. I think there's a lot of examples that I could think of that kind of showcase this. More recently, one of the big banks here in Brazil started using RAVM instead of an appraisal company that they were using previously. And I think that there's a lot of mistrust in general when it comes to sort of real estate appraisals businesses, but it's a very emblematic, it exemplifies exactly what you said. The fact that a decade ago, 15 years ago, you had to literally hire a physical appraiser that would look at the property, and that person just doesn't have the same capacity that sort of a machine learning algorithm has to assess the property. It's going to be inevitably much more of a gut-based decision. Even if he bases himself off of certain comps, he's not going to be able to ingest the same type of comp set of millions of comps the way that like a Zillow AVM or an Opendoor AVM can do. So just the richness of the data set and the fact that institutions now are waking up to the kind of beauty and the accuracy of this data, I think does allow us to potentially kind of grow into healthier lending levels. Healthy meaning higher amounts of leverage in the mortgage market, and doing so in a healthy way. I think that also, frankly, a lot of the guardrails here are in place around LTVs. So having a loan to value that is not sort of excessively high, where the US kind of, both in terms of the penetration of mortgages, but also the absolute LTV levels, just perhaps went a little bit too far. A lot of those guardrails here are already in place. So you have, I guess, much better data. You have guardrails around sort of the maximum LTV levels for any given home. And you're also hopefully approaching these sort of higher LTV levels in a way that, just from a consumer education perspective, is also a different point, because you can create much more individualized offers for users. You can educate your end user much more today with technology than you would be able to, or would have been able to, decades ago, right? If you're real estate shopping in the 80s or 90s or even early 2000s, you had very few tools available to really create a holistic view of what properties are worth and where you should be moving to. Whereas nowadays, that's it's almost as easy as comparing products on Amazon, and same way that e-commerce experience of benchmarking products and prices moved online. I think the home buying experience has also gotten democratized in a way.
Yeah, and it's remarkable that something that is the largest store of consumer wealth, at least in the United States, is so non-transparent. And so it's really interesting to think about where that goes. And I'm going to ask a question that's probably in some ways a segue into what's happening next for Loft. But I have a thesis, and I think Fifthwall does, that iBuyers and these platforms that enable consumers to sell their home with a higher degree of confidence, whether that's directly to the business itself or through their platform, as in the case of Loft, those businesses will become some of the biggest businesses in every market in the world, for no other reason than residential housing is usually one of, if not the biggest market in every country in the world. Do you think that thesis is true? Like, do you think that's where we're headed globally, that we have these intermediating C2B and B2C businesses that add transparency to residential housing markets globally?
Yeah, I mean, I think that generally speaking, it's hard to imagine a world in which that would not be the case eventually. if you just look at the evolution of intermediation or disintermediation of all other categories of goods and services, really. So, I don't, and I think we're really still in the early innings of this, but if you do look at categories of much larger ticket items, I think cars is an interesting example, albeit not a perfect comp to houses, but it is already something that is generally worth 10, 20, 50 times more than the average e-commerce purchase that you would make on Amazon. I think decades ago, people thought it'd be inconceivable to buy a car or to sell a car without, seeing the counterparty that you're interacting with. And now, generally speaking, the used car market is still vastly offline. So, even these kind of early pioneers that exist today were already worth tens of billions of dollars, but they're still early pioneers just because the market is so large. I think that they're bringing precisely that transparency and that convenience to the table that consumers are looking for. So I don't really see why that would stop with cars. I think that will extend itself to any consumer good, and the apartment or the home that any person owns generally tends to be the largest good that they own. I think there's a lot of innovation to be had, both in the way in which it gets transacted, but also in the way in which it is actually owned. I think that, and you're seeing a lot of that happening in the US already, but plenty of emerging markets where you see kind of this dichotomy of ownership being broken, where models that previously were just very kind of static rental or ownership models kind of get fused, and people just have the flexibility to think about the move itself and not so much about kind of, do I need to buy this or can I rent this? I think there's going to be a lot of intermediary solutions there, and you're going to see a lot more dynamism there. I think, again, smaller ticket items like cars, we've already seen a lot of that innovation. The leasing space in cars with low interest rates has exploded over these past decades. So I think we're gonna see a lot of exciting stuff there. To be seen how large these companies will be. I think that does depend a lot on sort of how local these businesses ultimately will be. I think frankly, Amazon has proven all of us or a lot of us wrong, in the sense that we wouldn't have thought that a business like this could scale nationally and then globally and sort of create so much replicability in its model, or so much scale in its operating system that would allow it to capture such a large swath of the overall market. But we'll see. That traditional real estate certainly has been a very local game. And I think it's undeniable that there's a lot of local specificity, certainly more local specificity in real estate than in sort of CPG or consumer goods more broadly. But it's also a lot more value. As you said, it's generally residential real estate tends to be the largest asset class in most places.
And so what's next for Loft?
I think it's all about creating a better end-to-end consumer experience. And I think we touched briefly on cross-selling services like mortgages, insurance, title, escrow-like services. Even though they don't fully exist in the same fashion here in Brazil, they exist in the US, the pain point exists. And so the ability to kind of create more and more of an end-to-end experience for the entire transactional journey is something that we're very focused on. I do think that we're also seeing a big opportunity in taking this to more tier one cities. I think we're initially at least very focused on the large cities around Brazil or Latin America generally. And so, I think we're already quite confident in the two big arenas that we're playing in, which is Sao Paulo and Rio, the two key markets and two of the kind of 3-4 largest markets in Latin America. But looking at other tier one cities, we're seeing a lot of opportunity there. And to your point, a lot of replicability in the model and sort of how we roll things out. So I think it's exciting times ahead. The pandemic also, despite all the suffering that it brought, it certainly brought with it a lot of silver linings as far as consumer adoption is concerned. And we've been able to sort of transplant even the pieces of the consumer journey that weren't already fully online. We've been able to sort of fast track them and put them fully online. So nowadays you can buy any home or sell any home 100% online through Loft. Even the deed gets transferred 100% online. So again, to the point around leapfrogging, I think that emerging markets did a pretty good job, not necessarily in battling the pandemic. I think that a lot of us failed there miserably, but luckily other parts of the economy adapted quickly and were able to kind of adopt to a much more remote world much more quickly. And I think that's exciting. I think that we're trying to kind of really open up our sales here and trying to take advantage of these tailwinds and offer a better service for all the customers out there.
Well, we are thrilled to be supporting you, and I think it's just an amazing vision of what can happen in these residential markets when you inject that data transparency to ultimately the buyer and the seller, but in turn capital markets. And we're really optimistic and really excited about being investors in Loft and supporting you. So thanks for chatting about the business.
Yeah, it was my pleasure. Always great to catch up, Brendan. And yeah, talk to you guys soon.
Great. Thanks, Mate.